All right, my clock says it's the top of the hour, so I'm going to get us started and we'll let people trickle in. So hi, everyone, and welcome to today's Business Performance Center webinar. My name is Kevin Velasquez, and I'm a Senior Marketing Manager here at NAIFA. If you didn't know, the Business Performance Center is one of NAIFA's 5 centers of excellence with the BPC, dedicated to giving you the tools and resources you need to help build and grow your practice. The BPC has great content ranging from articles by industry thought leaders, the ability to watch past webinars on demand, and tons of great upcoming webinars. So if you want more like that, be sure to visit bpc.naifa.org to learn more and get the latest updates. A few housekeeping items before we dive in, just so everyone knows today's webinar is being recorded. So if someone wasn't able to make it, or you have to drop out early, or you just want to watch it again, this recording is going to be sent out to everyone who registered in the next couple of days. In that email with the recording, we'll also include a survey, and we would really appreciate your feedback so we know what kind of content you'd like to see from the BPC in the future. And also, if you have a question at any point today, feel free to use the Q&A feature to ask it, and we will save a few minutes at the end of the presentation to address those. So without further ado, I will turn the virtual floor over to our special guest and presenter for today, Ross Jordan, Account Executive at CalSurance Associates, and he will be able to tell you a bit more about who he is and what he does.
Good afternoon, everybody. Appreciate your time here. Again, as Kevin said, my name is Ross Jordan with CalSurance. I've been an account executive with them for approximately 14 years. Prior to that, I was with one of my competitors. And so I have about a total of 25 years, give or take, of working with insurance professionals and their errors and omissions needs. I'm proud to say that I've worked with NAIFA during that period of time, probably for about approximately 20 of the 25 years that I've been doing this. So it's good to be back working on the program. And with that, we'll jump into this. As Kevin said, at any given point in time, if there's a question, please feel free to ask it. And then we'll open it up. And at the end of this, my contact information will be here in order to, if there's any offline questions that you want to ask. So with that being said, let's get the ball rolling here. Why do you need to protect your practice? It's very simple. It's money. 1 out of 7 life health agents will be involved in an issue that leads or potentially leads to a claim that will necessitate the involvement of their errors and omissions coverage. As you can see here, there are some real dollars associated with it. An accident and health claim, or an average about $18,000 to just defend it. $20,000 to defend a basic life insurance claim, beneficiary dispute, a suitability kind of issue. And then on top of those numbers, we start to look at what's the indemnity. So when if and when a member is found to have been negligent, or there's a suitability issue, that number is approximately $13,000. So as you can see there, it's anywhere between 21 and 33,000 or an average for a claim. If you're involved with any property casualty products, if you're securities licensed, those numbers are going to be significantly higher. And then even above that, if you're involved with, certain types of securities or any type of advanced life insurance placements, those defense numbers can easily fall into 6 figures. So this is why you need to protect your practice, not only from a standpoint of good, solid defensive business practices, but also making sure that your errors and omissions coverage is up to snuff, and we'll touch base on both of those topics here shortly. Over the last couple of years, claims are trending up, both on a frequency basis and severity basis. Those numbers are up year over year. That is to be expected with the continued uncertainty and downturn in the economy. It's almost like clockwork. 6 months after a downturn in the economy, we start to see E&O claims start to trickle in. This recent downturn has followed suit almost to the day. And we continue to see them. Again, the types of claims against agents are suitability. I didn't know what I was buying. The agent did not fully explain what was being sold to me, and therefore I want to back out of it. So it is definitely a time to be cautious, to continue to be defensive in your practices. Following up on this, why is it important? What does it mean to me, or what does a claim mean to me if I'm named in a lawsuit? First and foremost, even beyond the dollar functions, is your reputation. You live and work in a community, it could be small, mid-sized, large, it doesn't matter. Claim, regardless of the validity, can have an impact in your business. People will talk, the information, it gets out there, especially with social media these days. One person, one person who feels that they are wronged, can go into Twitter, they can go into Facebook, and that can have a significant impact on your business. Even if you've done absolutely everything correct, it's difficult to defend, against a public perception. And so, that's, in my opinion, that's one of the most important reasons why, why it's important to make sure that you're doing things correctly. It has a reputational risk. New business opportunities may go by the wayside again because of again, the alleged wrong that makes its way out into the into the atmosphere here. The second point is the ability to insure. A serious claim may jeopardize your ability to obtain, and I underline, affordable E&O. It is rare that somebody is really truly uninsurable. There are markets, primarily London, some non-admitted markets that will provide, E&O just about for anyone, regardless of the situation. But that term affordable comes into play here. A single claim, is unlikely to have a major impact on your insurability. And I say, a single claim, again, something falling within the averages, is usually not problematic, especially if it's won over the period of a long career. The numbers are just going to catch up to you. But a serious 6-7 figure claim, you will have a lot of the standard underwriting markets just decide it's not worth investigating. We're gonna decline and move on. So, and then anything involving a series of claims, again, whether they're interrelated or whether they're linked together with a common product, or a common theme, whether insurance being utilized as within a sales a sales tool that will further make it more difficult to find affordable How do we avoid these? First and foremost, that are coming in the door. There's really three key factors that want to focus on here. Is the number one issue with E&O claims, the number one allegation against agents is suitability. The product which was sold to me was not suitable for my needs, and no matter the amount of work, the amount of paperwork, the amount of time that you've spent with this customer, somebody comes in on the back end and starts to second guess you or second guess your work. Well, I have this other product. It may have worked a little bit better. We could have gotten a slightly better return on it. It's the hindsight is 2020, kind of scenario. And so that's what we see. That's really the number one allegation that we see against agents is the allegation that what was sold to me was not suitable. The one size fits all approach, it's problematic at best. You really need to understand what your customer is asking for, not only what they're asking for, but what their needs are. They could be asking for A, but in reality, they need B. It's important to have those conversations, to listen to your customer, to make sure that you understand, at least initially, what they think they want. And then it becomes, your job, your profession, in order to, provide solutions to that, or to communicate to them, look, what you're asking for, is really not realistic. And I know that's a very difficult conversation you have to have. And it may cost you a potential customer, a potential client. But as you'll see down the road, that sometimes saying no may be the best answer. In working with your customers, working with your clients, your prospects, the failure to update customer profiles as objectives as their lives change is really really a key component. It creates a contact point for you, whether it's on an annual basis or a semi-annual basis, whatever your practice dictates, or whatever your personality or your professional business methods, your contact point here. It's important to make sure that you're aware that somebody got married, somebody got divorced, they had a child, they received an inheritance. All those kind of issues can have impacts on the suitability of prior placed products, may create opportunities for future placements. And if you're working in a broader scope, or on a broader financial planning scenario, it's all that much more important to be aware of the changes that are ongoing within your customers. It may be just simply but it could also be as simple as you sold somebody $500,000 worth of term insurance. Nothing's really changed. Okay, thanks. I'll talk to you in another year. Let me know if something changes. So again, communication there is key. And then one of the things too is, when you're working with your clients, and we continue to see this, is, we went through many, many years of low rates of returns on safe products, certificates of deposits, money markets, etc. That has changed here over the last couple of months, but the low returns had created customer demands for greater returns. And that has put agents and advisors into situations in which they're chasing, products returns that may be outside of the risk profile, for their client. And that has led to, claims. The number one thing that you can do in your practice to help you avoid, well, not necessarily avoid E&O claims, but help in the defense of an E&O claim, is to document. Clear, timely. It collaborates your side of the story. It's the best defense money can buy. You can walk into a courtroom, you can speak well, you can be incredibly knowledgeable, but if you don't have that documentation that goes along with it, you run the risk of people not believing you. And so, being consistent in your documentation and being clear is really the best defense that you can buy. Notes from conversations, and then confirming the conversation in writing. Something as simple as, you have a phone call with a client, you'll follow up with a quick email. Great. Hey, I talked to, great catching up with you. Here's what we talked about. Let me know if you need anything additional from me. And then have that stored, put that into your client database, your agency management system, in order to, to preserve and document that. As the technologies continue to change over the years, make sure that your management system, that your procedures have a method to document. Email's less of an issue, but text and mobile conversations, especially text, texting back and forth. I have clients now that's now become our primary method of communication back and forth, greater than email. So make sure that you have a method to preserve those to preserve those types of communications. The documentation, it really serves as your evidence of due diligence and the actions that you've taken. So again, it starts with that customer profile, those initial conversations, the plan, the follow-up of the plan, the revisions of the scenarios. All of that is the documentation that you have taken the proper steps, and that maybe we're just dealing with a bad outcome, and that happens in business. But these are going to be the type of items which are going to protect you and make the defense of the allegations against you much easier. One of the things to keep in mind too is, I sort of dropped this bullet point in here, is problematic clients, clients that don't heed your advice. You want to be able to document that in order to protect yourself, or likewise, that if it becomes too much of an issue, that you just have a client that is just not simply listening to your advice, and it's not going to. Those are issues that might typically find themselves into an E&O claim at some point. So those are the steps. If you have clients like that, see if there's a way that you can part ways. If they're not gonna work with you on your advice, it might be time for everybody to just move on at that point. Again, communication. It's imperative to listen to your clients and your prospects. When we're dealing with on the health insurance side, well, not necessarily even on the health insurance side, but excuse me, at any point in time that there's medical underwriting involved with it, don't gloss over potential issues with medical conditions. Oh, you had a heart attack 5 years ago? That'll be fine. We'll get that through underwriting. You need to be clear. You need to be upfront, with your, excuse me, with your clients, in order that expectations are clear, that you may have to go to an alternative market. You may be, rated higher because of those. If somebody makes mention during the process, don't say, well, that's not that big of a deal. Let's just skip over it. It will come out either in underwriting. That's the best case scenario, quite honestly. Or if something significant happens, it will come out after the fact. And then that, we frequently see claims in which the allegation was, well, I told them that, he smoked 3 packs of cigarettes a day, but they just said it, go ahead and check it. No, it didn't matter. And, that's going to lead to a decline, benefits not being paid. And, then that's, likely going to circle back as an E&O claim. Discussions on commissions. How are you compensated? Again, another frequent allegation, against agents. It falls within the suitability world of, I didn't realize that you were going to get paid a commission on this, or if or the commission percentage was 7%. A lot of you work on fees. You probably have fee agreements. When you put together a plan. Likewise, if you're getting paid on a commission, just make sure your clients are aware of that. Just don't assume it, because again, that's another point in which somebody else can come in on the back end and say, well, you have this annuity, and look, they're getting paid 12% on it. This is not typical. So it creates an uneasy situation when they find out after the fact. Another point in the communication is when a client voices concerns, regarding performance. Again, whether it's insurance and an investment that is out there, it's always important if somebody is concerned to delve into it in greater detail, excuse me. Why are you concerned? Let's talk about this. Is this a short-term hiccup, or is this more of a long-term? The investment that we put you in 3 to 5 years ago is not performing as anybody expected. What are the alternatives? Sometimes there may not be an alternative. On the insurance side, the individual may no longer be insurable at the same rates, or rates of return as initially expected, or the investment is no longer available for purchase. So again, it's that communication, it's the back and forth, and listening and trying to manage expectations. Communications, and finally here, the communication of expectations and the goals, are the key. It just ties it all together. And that comes from both sides of the equation. Again, whether it's coming to you from your client, that they're, and that may be probing, you may have to probe and you may have to, to pull it out of them. But the better that you can understand what their goals and expectations are, and then you putting together a plan that, meets that, is the creation of a solid point, that hopefully avoids, future claims. So let's talk about what's going on in the E&O marketplace right now, because as I said earlier, claims frequency and severity are up, across the board. And I'm going to use a, sort of a wide range. We'll leave the P&C business out of it. But that trend, the trend of increased frequency and severity is across all lines of business right now. On the life side, what we're seeing the sale of really what we'll call non-insurance products, future interest payments, the FIPS, guaranteed return products. Again, they're not traditional, they're not insurance products, although they are mimicked, they are, attempted to be sold, in similar kind of fashion. And, we've seen historically there's a rotating, I guess, perpetual, flow of these flowing, coming through the space. And again, part of this is, as I mentioned earlier, they're chasing for higher rates of return for individuals. I can tell you, any E&O product, again, whether it's the NAIFA plan or any E&O that's out there in the marketplace, it's unlikely that you're going to get coverage for the, if a claim comes in on a non-insurance product. You may get some defense, maybe, but as far as indemnification on these type of issues, it's highly unlikely. Carriers every year are evaluating the newest participants in this, in these issues, and they end up being excluded on the E&O policies, every year at renewal. So again, something to keep in mind. The other area that we continue to see claims, and the severe, we don't see a lot of these, but when we do see them, they are well into the 6 figures. And at this point, under almost every group sponsored E&O plan, they're uninsurable, would be premium finance life policies. The claims on these are incredibly complex. The placements, involving CPAs and tax attorneys, they're just simply not insurable. When these come in the door, they're running, 300,000 plus to defend, because it's just it's the unwinding of these that that create the expenses that go along with those. On the health insurance side, we've seen an uptick again with the replacement of health plans, with the passage of ACA, and all the various detailed health plans of who's eligible, who's not eligible, at what point. We started to see some claims related to the tax consequences of somebody initially being eligible but no longer being eligible, or it just being misinterpreted. With this, they're not big dollar claims, but we have started to see a fair number of those come in. Can come in on an annualized basis. On the security side, everything that we've just talked about, the non-insurance products, the premium finance life, we see claims now, a fair number of claims, regarding discretionary or non-discretionary trading accounts. And again, does the registered rep have the authority, the written authority to make trades, discretionary trades, not only with the broker dealer, but also with the, with the client in order to do those. We see these, we see an uptick in these every time the economy starts to downturn. And, so it's not, it's just something we're seeing here in the last year or so, because of that downturn. And as the economy starts to, improve, those type of claims will go the other, we'll start to minimize. So what are some of the important things to have in your E&O policy? So a couple key terms that we're gonna touch base on here. So the first thing that is really the important thing is what's called the retroactive date or the prior acts date. So under a group sponsor plan up to and including the the NAIFA sponsor plan, it's typically defined as your first date, or generally defined as your first date of continuous E&O coverage. That wording will change a little bit if you are registered with a broker dealer, or if your coverage is with a broker dealer. But at a minimum, that's the type of wording you should be looking for. If you are in an individually underwritten policy, you will typically see a defined date. So on that policy deck page, it will list, January 1, 2000. Bear with me 1 second. All right, so we have a question here. Let me roll through these, and then I'll come back to that question, because we can sort of wrap it all up here. So the retroactive date, quite frankly, is, in my opinion, the most important thing that you should really start to look for after making sure that your E&O policy actually provides proper coverage. Does the coverage that you are purchasing provide coverage for the products which you are selling? And the reason, that has changed over time. Before, you used to buy an E&O policy, and if you were a life agent, it provided coverage for the sale of your life, accident, health, disability, long-term care, and annuities business. Now today's policies, you can pick your coverage level. Maybe you just do life insurance, life and health plus annuities. So it's important that, if you're in the business and, if you're in the business, that you make sure that you are, purchasing the coverage for products that you're selling. So if you think you're going to sell annuities, then you should buy that coverage. If you think you're going to be doing securities, you need mutual funds, you need to make sure that the coverage that you're buying has that, because it is something that, again, depending on the carrier involved, the sponsor involved, you may or may not be able to upgrade your coverage midterm. You may have to wait until the next, your renewal comes around. Next thing is, do you have your own limit? Are you sharing limits with other agents? Some group sponsor programs have a policy aggregate. That means that aggregate number is the maximum amount of dollars, both defense and indemnity, that policy will pay in any one given policy year. So, there are policies out there that have a $5 million aggregate, a $10 million aggregate. If you have, if you have a $5 million aggregate and you have, 10 people participating in it, maybe you're okay. But if you have 1,000 people in a $5 million limit, you're starting to flirt with disaster here in the event that there would be a large number of claims in any one given year. So it's it's just something to double check. There's more than enough markets out there that either have a very high, 50 million, 100 million, or an unlimited aggregated limit, within the policy that that you should be able to find, find that type of coverage. Claims handling. I mean, you're buying a piece of paper. You're spending, several $100s plus on a promise, that in the event that somebody makes a claim, and it's a covered claim, that the claims handling in defense of you is going to be provided. So you need to, you need to be sure that, what you're purchasing, most of the policies, sold here in the US, are duty to defend policies, which means it is the insurance company's responsibility to defend you. Now, that doesn't mean you get to go pick your own lawyer down the street who's never handled a defense, but from, because you went to high school together. But it does allow, the E&O is going to provide that defense for you, again, for a covered claim. And that's quite frankly why you're paying the premiums. You want to know that the attorney who's working on defending you, knows what they're doing. They do this for a living, and they're going to provide the best defense possible, to protect your business. The other thing too, if you are with, if you're securities licensed and you're with a broker dealer, it's, the vast majority of broker dealers have their own E&O program. You don't have a choice. You have to sign up. You have to sign up for their coverage when you affiliate with them. Same thing with many of the career E&O policies that are out there. So as you get closer to retirement, it's important to know what are your options. What happens if you decide to just leave? I'm going to get out. I'm going to stay in the insurance business, but I'm going to stay, but I'm no longer going to sell securities. I'm no longer going to be in a career brokerage shop. What are your options to either continue your coverage, to leave, to get out of your coverage? You may be forced to leave that coverage, and what does that provide, after the fact, from that situation. So it's it's important to understand those. It's important to start to ask those questions before you leave. I frequently have conversations with folks that, hey, I've retired from my broker dealer, or I've left my broker dealer 6 months ago, and I think I still have coverage. Well, I can tell you that in most cases, when you're no longer affiliated with your broker dealer, that coverage is going to end the day you leave that broker dealer. Even though you paid for, your certificate says you have 12 months of coverage, in the vast majority of cases, your coverage is going to end on that given day. So at that point, you've now created a gap in your E&O history. So it ties back to the retroactive date, first day to continuous coverage. So that gap now creates, situations in which, you may have sold something, 3, 4, 5 years ago that's no longer going to be covered. So again, it's important to start to ask those questions, again, before you leave or before you not. So there's 2 questions here. The first, an insurance broker, life insurance broker writes, 10 to 20 millions of permanent life to fund estate planning. How much E&O should that broker carry? As much as you can find. Typically under a group sponsor plan, you're going to, you can find the 2 million kind of limit. from that standpoint, to get limits above that, quite honestly, you're going to have to go into the individually underwritten market. You can, in that space, you can find limits up to 10 million. There are markets which will write up to 10 million. Let's put it that way. I'm not saying that you need $20 million. If you're writing, a $20 million policy, you need 20 million of E&O. But I would make sure from my standpoint, I would make sure that you have well into, the mid 7-figure range of limits of liability from that standpoint. The other question, do you suggest more than one E&O policy? Quite frankly, no, I do not. And the reason being is these policies, most E&O policies don't stack on top of one another. So if you buy $1 million here and $1 million from another sponsor, it does not necessarily mean you have 2 million in coverage. There are language in most policies that talk about other insurance. If there is other insurance applicable, then that policy becomes primary. This policy becomes excess or secondary. So 1 + 1 in the E&O world doesn't equal 2. 1 + 1 actually still equals 1. You're better off if you're better off buying higher limits of liability if you feel that's the need. That's going to be the cleaner and the better way to get to that point. So with that, bear with me 1 second. So let's just quickly talk about, as we start to wrap this up, talk about the NAIFA sponsored E&O program that we have in place. CalSurance has been working with NAIFA here for approximately 10 years, and some of the individual options that we have in it. Again, as I talked about on the prior slide, the retroactive dates, the prior acts date, it's defined as the first date of continuous E&O coverage. So again, we're going to pick up that prior acts as long as you have had, continuous E&O. We don't ask for it on the front end. We ask for it in the event of a claim. And so it's always important that you maintain your certificates of insurance, because you will be asked for them. If you've been insured with CalSurance, we can typically pull it from the system. But if you're with another broker dealer, there's not a master depository of all these E&O certificates that exist in the marketplace. So it becomes your responsibility to prove that you have had that continuous E&O back to the date of the incident. Under the NAIFA plan, you can pick your own limit of liability. You have 4 limits, anywhere between 1 million to 2 million. So there's like a 1-1, a 1-2, a 1-3, and then a 2-2. There is no policy aggregate. So again, you're not sharing that limits with any other agencies. We have coverage for different coverage agents. We have coverage for agents and agencies. For agencies, we utilize a sister company of ours called CITA, C-I-T-A, and so that gives us greater flexibility. So if you're a multi-line agency, if you are an agency or even an individual that's had some claims, it gives us the ability to individually underwrite the risk and price it accordingly. So that is available to NAIFA members. That also gives us the ability to offer higher limits of liability. So again, under the online quick and easy option, we can go to 2-2, which, as far as I'm aware, meets the requirements of just about every insurance company, right now. But if for some reason you would need a carrier, a specific product you're selling, or a specific relationship, or a contractual requirement with a company, we can offer higher limits through the individually underwritten option level. We do have a choice of coverage levels. Again, if you're doing your basic life accident health business, that's one. If you're adding in indexed and fixed annuities, that would be the middle tier. And then we also have the ability, if you are doing Series 6 related business, mutual funds, variable life, variable annuities, that's going to fall into our tier 3. So you can pick and choose the coverage that you need, provided that you're actually selling that business. So you're not going to pay for coverage that that you're not going to use. Nice thing about NAIFA, it's not contingent on writing business with a specific insurance company or being contracted with a specific insurance company. It's available to members. It's also available to non-members at a slightly higher price. But there's no requirement to be contracted with company X in order to obtain this E&O. Premiums start at $405 annually. A variety of payment options, credit card, installments. So it is quite affordable, for agents, that want to take a look. The website is here. It's www.naifaeo.com. Take a look. There's a couple tabs across the top: individuals, agencies, and then we also have a tab for investment advisors. If you're a registered investment advisor or an associated person, we do have a coverage option, again, through a different CalSurance program that we make available to the NAIFA members. So so we have another question here. Okay, so basically, life and disability broker, work for a national public accounting firm. Millions and millions of dollars in place. Broker's now retired from a prior firm, but is maintaining his license and will occasion write large permanent life policies. Is this broker buying coverage to protect against future claims or future and past business? It's sort of a difficult question to answer without more details. The business that was placed with the public accounting firm, again, this is with no policy, so full disclosure on this. I'm taking a stab at it. It's likely that CPA firm, this CPA firm has E&O. It's like, it should continue to be in force, for retired professionals. But again, without seeing that policy, without knowing the details, I'm going to talk on a hypothetical basis. So really, in that situation, you're buying for the business going forward since you retired. But it's unlikely, in the event of a claim or something that you've done when you were with that CPA firm, they're going to want to control the defense, from that standpoint. But to answer your question, absolutely, you can give me a call and we can talk about this in greater detail. That's probably be better. And so lastly, here's my contact information. Email, emails. Feel free to email me whenever. Phone number here will ring to my either my cell phone or ring into the computer. And with that, does anybody else have any questions? And if not, I'd like to thank you. Like I said, I've worked with NAIFA for many years. My contact information is here. Do not hesitate to pick up the phone and give me a call. Be happy to work with you. And if the NAIFA program works, wonderful. If not, then maybe we can find another solution. So with that, I say thank you.
Yeah, thanks so much, Ross, for your insight and expertise. I hope people found it very illuminating, but yeah, feel free to give him an email, a call with any questions after this. And like I mentioned at the top of the hour, we'll be sending out an email in a few days that has a recording of this presentation, as well as a few other links that will hopefully you'll find helpful. So if there's nothing else, doesn't look like we have any questions, then we'll get out of here about 15 minutes early. So thank you everyone for your time and have a great day.
Thank you, everyone. Have a great afternoon.